Joining me now, Nicki Hutley from Deloitte Access Economics. Nicki, good morning to you. So all of the attention over the past 4 or 5 days now has been over in the US. Where do things stand with the trade war? I mean, it's not exactly surprising that Donald Trump said that it's probably not going to be solved before the US election next year, because a lot of people knew that anyway. But still, how much of a problem is that?
Look, it is an ongoing problem, and we've just had last week the OECD downgrade their global forecasts, and particularly for the US as a large part of that, off the back of these ongoing trade wars. And it just creates that global uncertainty. And we actually know from economic modelling that increased uncertainty has a direct impact on business investment intentions. And so that's, just not going to help the economy going forward when we're already got that slowing momentum. If there's additional uncertainty that's slowing down the business side of the equation, particularly in the US, where that's already showing signs of a bit of weakness on the back of the uncertainty we've had for the last year. So it doesn't help anyone. It certainly doesn't help the Chinese economy, on which we are so incredibly dependent. We can't bank on them increasing their stimulus and infrastructure on an ongoing basis, and iron ore prices are already starting to settle to lower levels and more normal levels now anyway. So, that's going to take some of the gloss of our economy, which has been relying so heavily on those exports over the last 6 or so months in particular, to keep us even at that weak 1.5% growth. So it doesn't augur well. Trump says, of course, they're keen to negotiate a deal. But we're not seeing any signs of that, and as tough as he can be, the Chinese, I think, can be tougher. So it's an ongoing story.
Yeah, and I suppose that has a lot to do with the US cutting its rates, with Australia also very likely to cut its rates, within the next month, definitely within the next 2, you would have thought.
Absolutely, and myself and many in the market have brought forward rate cut expectations. So I'll now be looking for a rate cut next month, another 25 basis points. I think, for the Reserve Bank it's hard because obviously we've got unemployment that's rising, albeit at a very, small pace, but it's going in the wrong direction. It's not heading to that below 5. We need something with a 4 in front of it, the Reserve Bank thinks, to probably closer to 4.5. To have any meaningful impact on wages. And of course, we all know now that we need wages to move if we're going to get consumption to move to healthier levels and get the overall economy back to healthier levels. So there's this whole series of things that needs to happen, and it starts with the unemployment rate. So the one thing that they might be a bit worried about, the last 2 rate cuts, of course, we saw consumer confidence actually decline after those 2 cuts. And, people have been saving rather than going out and splurging, seems to be what we're seeing from both the early numbers and certainly from the anecdotes from the bigger retailers. So, there is that side, but I think on balance the Reserve is going to want to go earlier to try and stop that slowing momentum, try and give a little bit more confidence back to people. And I think it doesn't hurt also that, we've announced the government has announced a sort of a balanced budget and a surplus to come. So better news on that front as well might give businesses a little bit more confidence. Not entirely sure on that one either, though.
Well, it just adds to the chorus, doesn't it, that more needs to be done when it comes to stimulus. Isn't that where it all starts in terms of moving everything forward?
Yeah, it's actually quite worrying. Friday night I woke up, I was actually having a dream and I was yelling at the government that they needed more stimulus. So clearly it's really getting in my psyche. It's a bit alarming when you start having those sorts of dreams, but it is very much the sort of message that I and many other economists have been trying to give to the government. There are small ways that they can stimulate, but meaningful ways they can stimulate the economy. Of course, Deloitte Access Economics has been trying to advocate for a New Start increase for quite some time. Not just because it's a good social issue, but because it actually stimulates it. Most disadvantaged area gets into the economy. Actually, a lot of it gets returned over time as increased revenue anyway, creates jobs, and it actually helps the economy. So things like measures like that, like regional, smaller infrastructure projects, not those giant big city items, but there are lots of things the government can do with that, forward-looking $7 billion surplus to get the economy stimulated now. The Reserve Bank's been telling them they need to do it. The OECD's been telling all governments around the world, if we want to get out of this absolutely sluggish growth cycle, governments need to do more.